We're back in business. Let's talk about IT right now. NASSCOM last week declared its guidance for the IT industry, pegging exports growth from between 13 to 15% for fiscal 15. Salil, Parekh, CEO of Global Financial Services at Capgemini, now joins us on this conversation. Salil, thank you for joining us on Bloomberg. My first question is, what's your own assessment of the operating environment? NASSCOM says 13 to 15% forecast. Do you anticipate clients to be increasing discretionary spends this year?
So first, Harsha, thank you for having me representing Capgemini on Bloomberg. With respect to 2014, we certainly see a very strong positive momentum that's building up. So as you realized, with the economic development, the macroeconomics in the US and in the UK markets in the end of 2013, we start to see a gradual opening up of budgets, spends in the discretionary spend in those markets. Also with continental Europe, with clearly the crisis seeming to be behind us, we see some opening up within those markets as well. And then in the Asia Pacific region, we see continuing steady growth that we've experienced in the macro environment, continuing in those environments. So from our perspective, that seems to be the case. It doesn't appear that there's a dramatic shift in terms of much greater spend, but it doesn't appear to be a dramatic shift in terms of something slowing down. We see a gradual expansion in the macroeconomic environment.
Salil, when we talk to Indian tech companies and tech CEOs, one gets the sense that things are indeed improving in Europe. What's your own reading of clients in Europe, since you have large operations there? Are you seeing greater traction?
So what we see, and as you know, with CAP, we are a European-based company listed in Paris. We have a lot of experience with clients in the European market, and today all of that experience starts to show us that because the macroeconomic environment is improving in continental Europe, we see that the clients are starting to look to provide some spend. We also see that with the change in the environment, where there's a big shift towards digital transformation, many clients, especially in the retail sector, in the banking sector, in the insurance sector, are starting to see a usage of technology, which is starting to drive some spend. This is what's spurring us to be somewhat optimistic, especially in those sectors in continental Europe.
What about financial services, Salil, something that you are closely hands-on? Are you factoring in greater contribution from financial services as a vertical? Do you see it delivering sustainably higher growth?
So we certainly see that financial services is a robust sector for us. As it was in 13, it continues to be in 14. In the first view that we have of the demand environment, we see good traction in retail banking, good traction and especially growing in insurance, and quite a decent traction in capital markets. So all the three elements of our financial services business worldwide seem to be giving us some traction. We see especially some good movements, for example, in claims area, in insurance, in payments, in credit cards, in risk management, and then again in the area of multi-channel or all-channel usage in retail banking and the insurance area, stemming from the digital transformation.
Salil, I want to talk about the large deals. Do you have any visibility over the large $100 million plus deals out there? Where do you think in 2014-15 the bulk of the battle is going to get played out?
In terms of the large deals, we see no big difference from what we saw in 13. There are several of them out there. But those are not at the same volume that we were seeing, for example, not just financial services, but across the board some years past. What we see are clients trying to do transactions in chunks as opposed to doing a large multi-year transaction for all of their services. Having said that, there's still a lot of interest from clients to do things which are of scale, especially when you can show a transformation bend. So when we go into clients and we can show that we can transform their business, either their go-to-market or their operating environment or their cost structure, and we can deliver to criteria which are related to business outcomes, they are ready to engage with us on large transactions. We think the fight is in those areas where we have an ability to demonstrate that versus what some of our competitors can demonstrate.
One final question, Salil, and this is about pricing. Almost everyone that I've spoken to in the past 2 years has been saying that pricing has been subdued due to the challenging environment. Now that you say if things are indeed changing on the ground, do you see the ability to price your services better?
Pricing is always tricky. I think the minute we have a demand environment which is stable, typically pricing is less under pressure. Equally with the rupee devaluation and for activities related to India-based work, there's automatically some level of benefit that even the clients are seeking from that scenario. Overall, my own view is pricing remains today with both the pluses and minuses in a stable place. So we don't see an enormous pressure. Equally, we are not seeing that we're going to dramatically increase pricing. Where there's a big difference in the way the pricing works is where you have a differentiated capability. So today in the area of digital transformation, with the work that we've done with the MIT lab, with our own IP, with the approach we've put for analytics, for mobility, for security, we see that there's a lot of ability to differentiate ourselves in the market, and that type of activity always will secure a much better ability to have a pricing discussion with clients.
Salil Parekh, we'll leave it there. Many thanks indeed for joining us with your perspective. That's a view from Capgemini on the IT environment. All right, coming up next, the Asian markets track trade in the red. China's manufacturing index falls to its lowest in 7 months. More on that coming up in just a moment. Back in business, 2 minutes.